Hello traders, the title of the video is one trick about trading volume and Elliott wave count one must know. Alright, we are talking about trading volume and Elliott wave count, a trick one must know. Alright, so this is a video that I like to call a shout out. So I've been doing this kind of exercise at 24 Stock Trader YouTube channel when I'm recording some very short video, and those videos are very focused on one specific tips or trick that trader must know. And if I use the word must know, is a shout out. So I'm here today to shout out something that you must know. All right, am I shouting? Okay, all right. So if I'm shouting too much, forgive me for that. So we're going to go quickly to the yearly chart. I warn you that this is a short video, so don't expect me to stay with you for 100 hours. Okay, it's a shout out. So here it is. So we are talking about one trick about trading volume and Elliott wave count. One must know. So if you are counting wave, and there's something that you must know about the volume, bar. Now, I've been talking about, the first bias. The first bias are those smart market participants that create the first Elliott wave. So if you have been following us at 24 Elliott wave YouTube channel, or you are a member of 24elliottwave.com, you'll notice that I said that the first Elliott wave is the signature of the bull. There is a good reason for that, because we have during an accumulation section, which is usually a consolidation, the smart money is busy buying the stock gently when other traders are not aware of their trading activity. Okay, they talk about black pools. They are hiding the activity because they can go on Twitter and say, okay guys, we are now buying netease.com and we just purchased 1 million share, and tomorrow, okay, you understand. So the first Elliott wave is the signature of the bulls, and those are the first buyers, and the first buyers will allow the trend to continue because they are the one investing into that stock. If they pull out, the trend will fail. Sometimes they do pull out, and when they do, very often you'll see that the second wave will cancel the first wave. You don't want them to pull out. And once they hold a big chunk of that company, they buy millions of shares and they are not selling them yet, the stock will find it very difficult to go down. Are you getting the message? All right? So they will remain in place, and they will continue to buy, okay? When the second wave even started, because they have done their fundamental analysis, even as the second wave is pulling back, they try pulling back. People are selling it down during the second wave. The smart money will continue to buy. So, and it remain in place during the third Elliott wave up to the end of the Elliott wave. So you may say, Joe, is that a shutout? The shutout is this, my friends. Careful. There is usually a volume spike at the beginning of the trend. So this is the shutout today. Understand that if you want to count Elliott wave, you can look for the volume spike at the beginning of the trend. That will help you also to identify the first wave and even to prepare yourself for the trend that is likely to begin. The surge into the volume spike will alert us that there is a high chance that a trend may begin, and is also helping us to dictate the first and the second wave. This is the shout out today. Now, I'm shouting out. I'm making it a bit interesting. I hope you like it. If not, if you think that I'm being very rude today, all right, forgive me, all right. So here it is. We are on a yearly chart. One good example here. All right, let's go back to the normal discussion. You see the volume spike here. Hold on, please, traders. Can you see the volume spike. That's it. That's the volume spike. A surge in trading volume. Where was it? At the beginning of the trend. So as an earlier way trader, you want to know that. You don't need to pay attention to that, especially on the yearly chart. Okay, here it is, beginning 1 year. So look at that surge. So 1 year, those people were accumulating. They were buying a stock. They bought how much? Okay, 2.5 billion shares. Don't you think that that's a lot now? You see, 2.5 billion shares. So if you go on the stock market, you will see a lot of stock. They bought 2.5 million shares. Now it doesn't mean you just go and buy straight away. All right. Now you want to become an earlier way trader and see the reaction of the price. So here, am I talking too long? You have to keep it very short, this video. So now, let me go quickly to the monthly chart. So you see now, that's the volume spike at the beginning of the trend. So if this is what we call the fuel. We have enough fuel before the momentum. So if you don't understand the difference between the momentum and the volume bar, and you are trading stock, you need to subscribe to 24 Stock Trader YouTube channel, Digit 2, Digit 4 Stock Trader YouTube channel, where I'm trying to create an amazing YouTube channel that remains to be seen though. All right, so this is the surge into the volume, which is the fuel. Now we want the speed. So you have the car, okay, is full, all right, full of petrol, all right. Now you start going 1 gear, 2 gear, 3rd gear, and now you're going vavavoom, all right. That's it. Here it is. The vavavoom has started now, and you see going boom. Now here it is. And as an area way trader, this will help you to determine the first wave and the second wave, because usually we see that volume spike, especially on the yearly chart. Even on the quarterly chart, you may see it. Okay. Now, if on the yearly chart is quite pronounced, but if you go to the monthly chart sometime, this is what you will see. You see here? You see here? This is it. See, it went up like this, okay? And then alert you that sometimes people, you will see the surge into the volume like this, and then it probably will be going horizontal. You see here, it was going horizontal, and you say, oh, George, what is this? You say that when we have a surge into the volume, we will have a new trend. So you see how many years the stock was stuck in this session here? But the point I'm making to you here is that as long as those smart money do not sell those billions of shares, it's still good. You see how many here? So they load it. Here it is, my friend. Normally I should charge you how much for this? Let me know in the comment how much I should charge you. All right, $100, $1 million. All right, this to make you laugh a bit. Because when you're talking about money, people get a bit upset. So here it is. In 2003, they load it. And look, all this year, the price was stuck in this session. So if I told you in 2003 that this is something you need to watch, if the smart money buys and they don't sell, you need to watch that stock. That stock should remain put in your bullish watch list. Why are they holding it all this year? Here it is, many years 2009. Now the stock market begin a bullish trend. Now here it is, start going out, and then here we are, boom, boom, boom. I need to remind traders that for this particular stock, I'm watching the time, it's quite challenging to count wave on a monthly chart. You see here, it's not easy to find the first wave and the second wave. But now, using that the surge in trade volume, which I said to you, will alert you, will help you to identify the first and the second wave, because if you get the first wave wrong and the second wave also wrong, you are starting on the wrong foot, all right? So you look at this here on the monthly chart, you see on the yearly chart, you see how it went up. It's not easy to see the first wave and the second wave, but I can assume that it's the first wave. But now, where is the second wave? It's not very clear. The only thing that I can think of, all right, is this pullback a little bit here. Is it 38.2%? I don't know. But that's all I can say. But one thing that is certain is that this is the third area wave here. Sometime you may see that the third area wave may also include, okay, the fifth wave if you go vertical like this. But the shout out today is that the surge in trading volume, very often will signal that there is a pending, am I speaking with my beautiful American accent today? There is a pending trend coming soon, all right? That trend, if those first buyers do not sell, will take place, all right? So this is it. So it will help us to find the first wave. So usually you will see it, and then you will see the first wave, and then the second wave. Here it's not very clear, all right? And then you will participate in a trend. If the first buyer starts selling, all right, we see another volume spike here, and it starts selling, then the trend will fall. That's the situation when we see sometime the second wave will cancel the first wave. That's what the Elliott wave rule stated that the second wave should not cancel the first wave because it means that the first buyers are coming out. They shouldn't. What is usually taking place is that when the first buyer buy during the accumulation period and also during the first wave, as the second wave is the price start pulling back during the second wave, they will continue to buy again. That's why the best, okay, third wave will take place after a 38.2% Fibonacci retracement level, and very often will stop at a 61.8% Fibonacci retracement level. That's the normal place for the second wave to turn around if the first buyers are serious buyers. That's why we don't want the second wave to come all the way to the beginning of the first wave. That's it. We don't want it to be too long. So that's it. I think I've said enough. Okay. So this is the shout out today about one trick about a trading volume and area wave count. One must know. So the signal is the volume spike or the surge in trade volume, and then now we as an area wave trader we get ready to perform our area wave count. It's also like a reference point. The volume spike is also a reference point that is alerting that the trend is likely to begin. Now we are ready to count the wave. If the first buyer start divesting, selling that stock, the trend will fail. If you have any question or suggestion, feel free to put in the comment section, and in due course, I will be recording another video to answer your specific question. If you truly believe that this video has been useful to you, alright, feel free to give us the thumbs up. If you think that, Joe, this is another useless video, alright, let us know by giving us the thumbs down. You think that this is an amazing tutorial, okay, feel free to share it on Google+, on Twitter, and also on Facebook. This is a shout out today about one trick about trading volume and area wave count one must know. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about one trick about trading volume and area wave count one must know. Speak to you soon.